The inflation rate, which is the debasement of the currency, has actually been 4%, not 2%. So when you calculate what is your return, here, you want to hear a crazy stat?
Sure.
Listen to this. This one's going to blow your guys' mind. New study from JP Morgan, 2002 to 2021, I believe. The average investor return, 3.6%.
Pomp begins with a blunt but necessary truth. About half of U.S. citizens are watching the value of their life savings erode. Whether earned through hard work or given through government programs, those dollars don't buy what they used to. He gives a simple illustration. Imagine you had $100 5 years ago. Today, that same $100 only buys about $70 worth of goods and services. That's a 30% loss of purchasing power without you ever spending a dime. This invisible tax, known as inflation, is one of the main reasons so many families feel squeezed despite earning wages.
How many people? The stats all vary, but about half of U.S. citizens hold 100% of their economic value that they have worked hard to earn, or the government gave it to them, that they has lost 30%. That's like saying I have $100 to my name. Now I can only buy 70 cents worth of goods or $70 worth of goods. Like, hello.
I know.
You got to become an investor. So do you want to know why the income inequality gap is widening, or the wealth inequality gap is widening? It's because we have an education problem. And guess what? The government is responsible for some of this. How many people would love to invest in private companies, but they can't because they're not accredited investors? Then how many people are being boxed out or significantly slowed before all these FinTech platforms came along in getting stock brokerage accounts, in getting some sort of investment account? Thank God for the Robinhoods, Weebles, Public.coms, eToros, etc. Thank God for the Coinbases, the Krakens, the Geminis, the Binances, etc. Because those platforms now give people access to investment assets. Mm-hmm. And so you can look and see and say if 30% of the dollar's value has been lost in the last 5 or 6 years, you have to be an investor. Now, that feeds into Bitcoin is the hurdle rate. If you can't beat it, you got to buy it. Because if you look at the S&P 500, up 100% since 2020, priced in dollars, priced it in Bitcoin, the S&P 500 is down 85, 90%. So it is all about relative comparison. What are you denominating the asset in? And ultimately, what we are living through is we are living through a transition period where a lot of principles that people thought were timeless, that people thought were safe, that people thought were prudent, are proving to be disastrous if you follow it. If you have 40% of your portfolio in bonds, as a modern, as an archaic 60-40 portfolio would historically tell you to do, you are getting crushed. TLT is down 50% in the last 5 years. You are getting crushed. 60-40 portfolio does not work the way it used to work because they are debasing the currency at an accelerated rate. It's hurting treasuries. Then if you look at 1971 to today, the inflation rate, which is the debasement of the currency, has actually been 4%, not 2%. So when you calculate what is your return, here, you want to hear a crazy stat?
Sure.
Listen to this. This one's going to blow your guys' mind. New study from JP Morgan, 2002 to 2021, I believe. The average investor return, 3.6%. The average investor, the S&P during that period, 9.5%. So the average investor underperformed the S&P 500. That's bad. But you want to know the craziest part of that story? If you earned 3.6% per year, which is what the average investor did, the debasement rate of the currency at that same period was 4%. That means that the average investor actually had a negative real rate of return for 20 years. A negative real rate of return. They did not outpace the debasement of the currency. You want to know why the average family can't survive? Do you want to know why people can't afford things? Do you want to know why the average person is struggling? It's because of that. They are not able to grow their salaries or their wealth in their investment portfolio at a faster pace than the debasement of the currency. And so they fall further behind. And it's the people who understand this stuff, the people who know how to invest, they're the ones who get ahead. And that is the story of citizens in America, the affordability crisis, the housing crisis, and all of the wage growth is all told in that one thing. The average investor from 2002 until 2021 actually had a negative real rate return on their investment portfolio, and they got crushed.
He points out that the U.S. already holds confiscated Bitcoin, but so far they sell it off rather than holding it strategically. While there are discussions about the U.S. buying and holding Bitcoin, Pomp notes this likely requires legislative approval, a slow and politically complex process. Still, he believes it's inevitable that the U.S. and other nations will adopt Bitcoin as a reserve asset. The only question is when.
That they now realize that there is quite a bit of legislative checkboxes that they need to do in order to buy the Bitcoin. And so when you go in and you're like, hey, we want Bitcoin on our balance sheet. Okay, well, let's stop selling the Bitcoin that we've confiscated. If we confiscate more Bitcoin, we're not going to sell that. Okay, that's a good start. They said, we have plans to buy more Bitcoin. Great. But doing it requires legislative approval. And I think that that is going to be a little bit harder. And so I do think that they will do it. I just don't think it's going to be a short term, right? Now, whether that's true or not, whether they decide to go to court over it, they have options. But it sounds to me like that is what people believe, is that Congress is going to have to sign off on it. So it's going to take a longer time to be able to do it. And, I'm not an expert on Washington, D.C., but if you have only so much, political capital, do you want to expend it on buying more Bitcoin, or do you want to expend it on, the one big beautiful bill, or, other things like that? I think that's the, calculation that's happening. But I do think the United States will buy Bitcoin at some point. It just seems like maybe it's a little bit further out than we originally thought, right? So, to be clear, I'm not predicting what's going to happen. I'm just simply saying, at the time, I think Bitcoin was somewhere between $50,000 and $75,000. I said I could see Bitcoin going to around 150, plus or minus $10,000, $20,000, whatever it was.
AI is eliminating some jobs, particularly for young workers or those without specialized skills. But it's also increasing overall efficiency, corporate earnings, and economic growth. In Pomp's words, the economy is getting stronger and more productive, even if certain groups of workers are left behind. For individuals, the choice is clear: upskill, reskill, or create new opportunities. Competing with AI requires offering unique human value that machines can't replicate.
People can yell and scream about it all day, but that is how innovation works. Yes, people are going to lose their job, but guess what? Yes, people are also going to gain new jobs. Mm-hmm. And so that is how this plays out. And again, I just call it how it is. People don't like it if they're on the wrong side. People like it if they're on the right side. The company's job is to produce a product or service as efficiently as possible and create a return for its shareholders. There is technology now that allows them to do that in a way that they previously couldn't do. And so if you're a young person that doesn't have that much experience and has not yet proven to the market that your expertise is actually valuable, you are going to have a harder time, because now you are competing with thousands, millions of AI agents who can do some part of your job. So you better come up with a very unique proposition to a company as to why they should hire you rather than use AI. On top of that, what you are seeing is companies are saying to themselves, wait a second, because there was uncertainty in the economy because of the tariffs and the trade wars and all that stuff, I actually do not want to go and just keep doing what I'm doing. Instead, I'm going to reevaluate and say to myself, what are the options that I have? And people started to say, well, maybe we don't need to hire a person. Maybe we can just do something like use artificial intelligence. And so I think what you are seeing is, if you look at it from an economic lens of job creation, yeah, you're like, oh, this data is bad. If you look at it from an overall economy standpoint, earnings are up. Earnings beat expectations. So if you're focused on jobs, yeah, it looks bad. If you focus on the whole economy, the economy is actually getting more efficient. There's getting more productivity. GDP is growing like a weed. It is good for the overall economy. It's bad for the people who don't have a job. And so guess what's going to happen? You are going to see three things occur. People are going to have to upskill, reskill, or create a job.
Anthony Pompliano's message is simple but urgent. The financial world is shifting under our feet, and the rules we were taught no longer apply. If you are relying on outdated strategies like saving cash in the bank or holding a 60-40 portfolio, you are not standing still. You are moving backward. The winners of this new era will be those who educate themselves, embrace investment opportunities, and adapt to technological change. Bitcoin is no longer a fringe experiment. It is becoming the benchmark for wealth preservation in a world of relentless currency debasement. And as AI transforms industries, individuals must bring unique skills and creativity to stay relevant.